But next up, we've got the U.S. Treasury conducts largest ever buyback of 15 billion. Now this comes from this comes from not a news site. It's called A Invest or AI or Invest whatever. So the U.S. Treasury Department announced today. Okay, so today this was from a few days ago, but it happened today. The U.S. Treasury Department announced today it will conduct its largest ever buyback, totaling $15 billion, as part of broader efforts to manage federal debt and stabilize market conditions. This action reflects ongoing efforts to maintain confidence in global securities and support broader financial stability. Um, and this article talks about some other companies. I don't care. Um, Governments and corporations repurchase programs often reflect strategic decisions to manage capital and investor expectations. For the U.S. Treasury, the $15 buyback likely aims to reduce debt insurance and make sure and support market liquidity in light of recent economic shifts. For companies, don't care. Analysts are closely watching how these buybacks impact liquidity investor sentiment. Um, this move is also seen as part of a broader efforts to optimize the firm's. Oh wait, never mind. Whatever. I mean, it's a buyback. So there's a couple things for buybacks. Now they did state earlier, um, it's the what's called. It's kind of aims to reduce debt insurance and support market liquidity in light of recent economic shifts. I'm going to talk about one of my favorite games, Stonks 9800, because it happens in games. So usually when companies, now granted, this is not the U.S., this is stock companies, but we talked about this before. I don't think it was on the channel though. So when companies split a stock, it's because whatever the stock is hovering at, the company itself does not believe it's worth that much. While they do want it to be that much, but the ramifications of the stock crashing can be way worse than just splitting the stocks and getting that price down to whatever they think it is, whatever they reasonably think it is. Now, again, the goal is to get up to that number, but just because a bunch of people rally behind a stock, that doesn't automatically make it worth that actual amount. Now, when a company buys back stocks, it's usually it could be one of two things. These are two main things, but there's I'm sure other reasons. One, they want to go back to private, and they're slowly doing it over time because for whatever reason they don't want to be public. They want to buy back their stocks. An example is the when Elon Musk acquired Twitter, there was a stock buyback. Now, granted, he was buying back all of the stock. It wasn't just a portion, but he purchased all of the stock back and took the company private. I don't know if it's still private now, but I remember that's what was happening. A second reason a company buys back stocks is kind of the reverse scenario. They believe their stock is actually worth more than what it's selling at, but it's not gaining the momentum needed and it's not having enough confidence in it. So they will start buying back stocks to kind of, I don't want to say inflate the price, but that's essentially what it's doing. It's taking it from a lower end to a higher end because they believe it's worth. And to an extent they're willing to take on the risk. They're buying stock, they're just buying it back for themselves. Um, for the US, for the US Treasury, it's probably not because they want to go private. Uh, by targeting specific securities and maturing in a narrow window, it was May 26th to March 2028. The Treasury is attempting to manage what the sources call a wall of maturities. So these are bonds that people have bought, and they are set to mature in between the dates of May 2026 and March 2028. Instead of letting those bonds come to maturity, they're just buying them outright. So one, it kind of again that we sell bonds to fund our stuff, but if we're buying the bonds back, It's kind of like we don't owe that debt anymore. Now, it should be noted this is not reducing the national debt. That is different. We're just essentially, it's like paying off your credit card before it's due. Nothing wrong with that, but it's not like your debt's going down. You know what I mean? You have debt, and then you have your credit card. You're just paying it off before it's due. That's one thing. Large amounts of debt maturity simultaneously can create a quote a moment of reckoning unquote for the financial system. A buyback allows the government to retire these obligations early, preventing a concentrated quote cascade unquote of repayments that could stress the market. Yeah, that's another thing. Bonds when they're due, you gotta pay it. So gotta pay it. It's the U.S. government. They can do whatever they want, but it doesn't look good on paper when we're going through a recession and then we have to give more of our tax dollars to pay the bonds out. Does that make sense? It's kind
Right.
of yeah.
Yeah.
It's kind of the goal. The primary goal is often to facilitate the orderly functioning of a financial market. Because, quote, liquidity vanishes as markets plummet, unquote, the Treasury acts as a buyer of last resort for these specific bonds, ensuring that holders can convert their assets into cash without causing a price collapse. Yeah, there you go.
Yeah.
I just thought, I don't think this is like crazy news for sure, but it gave me an excuse to talk about stock trading, which is fun. But again, they announced this like that they were doing this, and even then, I think like they announced it last year that they would be doing buybacks. And again, it's not really lowering the national debt, but it's kind of a show of face that like, hey, the economy is fine. It's doing so well that we can buy back some of these bonds and securities without facing intimate collapse. Does that make sense? So, kind of like with the example of a company buying back stocks because they think that the value of the stock is worth more than what the asking price is. Us buying these bonds and securities back before they mature is kind of like saying, hey, the economy is doing better than, well, granted, numbers are probably fluffed, but whatever. Like, hey, the economy's doing better than what is being portrayed. Here's here's an example. We can buy these without causing a fuss. Um, I don't know why. I have a definition. Bonds are legal commitments to pay fixed amounts of money on a fixed date. By buying back 15 billion in debt, the Treasury is reducing its future fixed obligations, and it does not reduce the overall national debt or deficit. Those are driven by spending/tax policy. Um, okay. So, anything you want to add before I get to the next part?
Nope.
Okay. So, something else. I did speculate. In my notes, I speculated about this. I don't know how accurate it is, but bond prices go up and down with interest rates, and inflation does not help with that. So again, it's the concept of spending money. The money you have now is not worth the same amount later on, usually because it's deteriorating in value. This could be now. Granted, I do think it's kind of a show of face. The buyback is a show of face that like, oh, the economy's doing fine, but it could also be like, hey, we expect high inflation in the next 2 years. Let's buy these bonds now before we'll have to spend more money to buy these bonds. Does that make sense? Could be
Hmm.
could be something that's on their mind. I mean, I have to imagine. I can't imagine that there's much people in Congress that aren't thinking about economic stuff. Well, at least economic advisors, whatever. But that could be something. That could be them being like, "Hey, we're expecting inflation. Let's get this out of the way. Let's make our payments now. That way, we don't struggle to make the payments later." Um, I don't know why I put that note there. Um, this operation creates a quote allocative effect unquote where the government shifts money from its own bank accounts into the private banking system. Governments often resort to such maneuvers to maintain the quote trust the people. Yeah, look at that. I should just read my notes. In the monetary and fiscal system, if investors begin to worry about whether a massive national debt can be quote turned over unquote as it matures, it can immediately inhibit current investing. While the buyback can stabilize bond markets, it is not without risk. If the government funds such operations by creating more money, parentheses, effectively printing money, or quantitative easing, parentheses, it risks inflation. There's also the danger of fiscal flatulence, where the government's need to fund its debt dominates the ability to manage the economy. If the Treasury must borrow new money at higher rates to pay for the buyback of old debt, it could worsen the long term deficit. I mean, I feel like we would have gotten news if they were just going to print more money. Granted, they're always printing money, but making, you know what I mean? It's kind of like, oh, I'll take out a loan here, loan at, sorry, I'll take a a loan at place B to pay for the loan at place A. Well, to pay off B, I'm gonna have to take out a loan from place C to pay for loan B. I feel like this would have been I wouldn't have to go to this investing site to get that kind of news. So I do think it's just again show face. And to be fair, I don't know. The economy could secretly be doing better. I just pay $4 a gallon for gas because fuck me, I guess. Uh,
Okay.
anything you want to add to that? I just really wanted to talk about that. I thought it was interesting.
Honestly, it's monetary policy. I wouldn't say it's necessarily super far outside my purview, but it's also one of those topics where it's just like I don't know. It you could know a lot about one bit, and then someone will talk about another bit. This part I'm just not familiar enough with to make a smart comment on.
Oh, good. All your comments are smart. But again, like
Damn.
this isn't like super crazy news. The U.S. already talked. They already said they're going to do it. They even announced a week before they were going to do it. That's right, 2 weeks before they're going to do it. I just thought it was a. I thought it was interesting because now granted, I do like. I didn't know that they would do this regularly. Because in my mind, like making smart decisions is not something I would bet the government to do. So that's that.
Amen.
But I don't know. I thought it was nice to talk
Amen.
about. And
Yeah.
speaking of the economy,